But shifting focus back to commodity market then and everything that's happening in the global tariff war front, new day and new developments on the tariff war, where President Donald Trump is doubling down on tariffs, confirming 25% tariffs on Canada and Mexico from next week, while Chinese imports will also face an additional 10% tariffs. Let's break it down, the key dates for you. March 4th, that's when tariffs on Mexico and Canada will kick in, and April 2nd, that's when reciprocal tariffs will come into play. But here's the twist. China is now urging the United States to engage in talks instead of escalating tensions. What does this mean for global commodity market? To discuss this, we now have Mr. Anuj Gupta, Head of Commodities and Currencies at HDFC Securities, now joining us. Mr. Gupta, thank you so much for taking your time out and joining us here on ET Now. Help us decode everything that's happening globally. We had US President Donald Trump, who reiterated yet again that tariffs will be imposed. Dates are also out now. And China, of course, has retaliated. They're saying that we need considerate discussions in order to take this forward. What does this mean for global commodity market?
This is mean that again we can see some disruption in the global market as Trump say that he will impose tariff on Mexico and Canada on March 4, and again on the April 2nd would be the date to reimpose the tariff plan. So that will increase the uncertainty, and we have also noticed that after this discussion, we saw a sharp correction in all commodity market, particularly in bullion and base metal, and in also in some agri commodity as well. So this disruption will work as a negative for the commodity market, because now as we have seen that equity market also correction, so people are exiting from the commodity positions and they have creating a shorts in the commodity side. But still, this news will impact the commodity market as a globally, and possibly we can see some save again, save against the hedge position in the again in the commodity market. So for the short term perspective, we can see some correction in the commodity market, but for the longer term, because disruption is there and the geopolitical tension may occur in this scenario, so possibly the safe haven demand may be there.
Understood, sir. And I also wanted your thoughts on copper, because after aluminium and steel, Trump has also started investigation to levy tariffs on copper. They believe that China is aiming to dominate the global copper market. Those are the words that have come in from the US. What does this mean for copper and for other industrial metals?
See, after imposing the tariff on industrial metal, we saw a sharp correction in all the industrial metal, including silver. We have seen that copper prices corrected from 860 level to 847 level. So we have seen a sharp correction in copper prices, and not even copper. We also saw correction in zinc prices also, and other in industrial metal also. Silver is also correcting from the high level. So all industrial metals are correcting, and this tariff will impact a negative for the metal, because possibly the demand may be lower and the supply may higher, so possibly the price of copper and other industrial metal may be lower in the coming days.
Is expected to increase in the global market because of these tariffs, and because of increasing supply, prices might come under pressure. But also wanted your thoughts on China. Iron ore prices have declined below $110 per ton on account of weak demand from China, on account of global growth concerns, and China in any case has been a problem. How do you read the China real estate demand factor playing out going forward, and its impact on both steel prices as well as iron ore prices?
See, however, we saw a positive GDP increment in China, but the tariff impacted a negative on the China, and we saw weak demand for iron ore, or the copper and steel. So these are all the main industrial metal which are impacted a negative due to this tariff, and I am expecting that the price of iron ore, steel, and the copper may correct further because the demand is lower, and this tariff impacted the overall industrial activity in the China, and due to this tariff we can see some lower industrial activity in the China, and that will impact the overall consumption of the base metal. So expecting that the growth of industrial consumption in China may be lower, and due to this we can see a sharp correction in the prices.
Metal prices could correct, that's the word coming in. But what's your thoughts when it comes to crude oil? Brent crude has also fallen below $74 per barrel. There are several concerns globally, and US is also increasing production and putting pressure on OPEC Plus to revive their production. What's the outlook when it comes to demand supply for crude, and what's your target when it comes to Brent crude for the rest of the year?
See, currently, crude is trading around $70 per barrel, and at that moment, we saw, two ways news. One is the Iran is opening its, the production belt, where we can see a sharp, supply may be there. So that will impact on the crude oil prices, and also US is, drilling a lot crude. And due to this, we saw a sharp increment in the US inventories. So that will be a negative for the crude oil prices. But yes, this tariff impact positive maybe for the crude oil prices, and we can see some positivity from the lower levels. But currently we are expecting that market may be a range bound, but overall, as far as concerned about the long term expectation, we are expecting that crude prices may be lower, and we are expecting that crude may test $65 to $68 per barrel in coming days, and definitely the higher supplies may impact negative on the crude oil prices.
Okay, so Brent crude could touch $65 to $68 per barrel in the coming days. That's the word coming in. Mr. Gupta, thank you so much for taking your time out and joining us here on ET Now and helping us decode what the implications could be of escalating geopolitical and tariff war. Thanks so much for joining us.
If you like this video, then like, share and subscribe to ET Now.